that I do think that there's something going on much higher than where we sit, and they are using suppression of price and of rhetoric and this environment to really have their way with the market. And I would argue ultimately continue on their plan to drain the exchanges of the investable silver before everyone wakes up and says, hey, I want to take delivery too. But it'll just be very obvious that there isn't enough supply at that level to meet that kind of demand.
Early last week, as silver prices began to show the early signs of an upside rally, several technical analysts said they were optimistic that we were finally about to get an impressive upside rally for the precious metal in 2023. But instead of the rising wedge pattern they thought was forming, silver has slipped further. It dropped below $24 on August 2nd, and as of the time of writing on August 9th, has dropped even further to $22.66 spot. Franklin President Andy Schectman agrees with the technical analysts that silver should have had at least one massive upside rally over the past month. According to the renowned investor and bullion dealer, the only thing stopping that is the continued heavy manipulation of silver prices by large commercial banks in the United States. During a recent live stream with Liberty and Finance, Andy references an article written by Ted Butler, founder of Butler Research and an expert's expert on silver price manipulations by financial institutions in the United States. In one of his recent posts on the issue, Butler raises awareness about the emergence of a big managed money trader holding a net short position of roughly 10,000 contracts or 50 million ounces in COMEX silver future contracts. According to Butler, this large managed money short trader first appeared a few months back and has previously reduced their short position profitably on lower prices, and now they are back for more. In his post, Butler notes, "It doesn't bother me in the least that this big managed money short exists, for the simple reason that at some point, with silver prices lower or higher, this trader will buy back its large short position, as it stands no chance of closing out the short by actual physical delivery." As a result, Butler considers the existence of such a large short position as a positive for future silver prices. He adds that if the trader buys back lower, it will be a supportive influence on the precious metal's price, and if the trader is forced to buy back at higher prices than when they got in, that will only enhance the buying frenzy for silver. During his interview, Andy optimistically notes that regardless of the obvious heavy manipulation of silver prices, the precious metal is ridiculously oversold and due for an upside rally in 2023. Before we listen to Andy's in-depth analysis of the ongoing silver manipulation, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks, and enjoy the video.
It was a very bullish formation where a lot of the analysts, the technical analysts, were expecting a much higher price as a result of it. And you see a ridiculous smashing by the commercial banks where they came in and increased their short position to the open interest is so many times greater than the availability of bars to be delivered. Many times greater. This was done specifically to keep the price of silver from rising and gaining more attention, because the majority of the advisories, the majority of the funds, they all employ technical analysis into their decision making. And this was an overt attempt to keep, I believe, silver from going higher because it was going to trigger a pretty significant buy signal. But the lack of enforcement by the CFTC is startling. This is not how free markets should be operated, and it's completely obvious what had happened. It's a drive-by shooting. They flushed everybody out, and this becomes a very dangerous game when you have many times the open interest as our bars backing the ability to be delivered. And so, yeah, that is a big deal. People wonder, well, why isn't the price going higher? Well, my question would be, why isn't the CFTC enforcing what is a ridiculously concentrated short position by a couple of the largest commercial banks, probably the biggest chief being right now Bank of America? And, this is not going to change until it does, but it's the type of setup where you could see a very significant move higher, just simply based upon this leverage that is being injected into the system. And it's being leveraged without any governance, without any checks and balances. And, everyone should read Ted Butler's article from yesterday or the day before. It might even been today, but I just read it, and that's exactly what he's saying, is that they came in overtly, smashed the heck out of it, and to such a degree that, it's pretty hard to see any real rationale to do it in an environment where we have a shortage of silver, where there's so many reasons the price should be going higher. But I will say, at least from a standpoint of trying to remain optimistic, we are ridiculously oversold. And I would expect we are very, very near the bottom of this once again, this flush out by the commercial banks.
Yeah, another person whom we've interviewed on our channel multiple times, Michael Oliver, who looks at momentum.
With interest rates rising, everything is starting to become a little bit different and a little bit riskier, and you're starting to see things break. This is a game that becomes very, very dangerous when you have global demand, whether it be in military, whether it be in industrial, or, of course, the big monetary push that we've seen in gold and silver, where it's not just silver. You see the same thing with gold, and yet the central banks bought more in the first half of this year than ever before. And so, look, this is a deal where it was easy to suppress the price when nobody wanted it, but you're seeing such a need and demand for it on a much higher level than the retail. It's interesting that Ted Butler will cite a real shortage in the 1,000-ounce bars on the wholesale level. And I guess when you say there's just roughly 30 million ounces in the registered category, that's a true statement. When you see the deliveries off of the exchanges all over the place, including huge redemptions out of SLV and GLD, which are the authorized participants doing it very covertly, the demand at a level much higher than where we sit is real, and as is the shortage of availability. It's certainly based upon the open interest. It's many times less bars backing those contracts, where if they stood for delivery, well, we'd have a problem. That's interesting, because we've seen the premiums on everything come down and the demand on the retail side come down. Now, I will say this: it's interesting that today we saw a slight increase in the Silver Eagle premium. And so, maybe people are starting to wake back up again. I'm not quite sure, but I would simply say that I do think that there's something going on much higher than where we sit.
Andy says all the signs are there that something much bigger than we can even begin to comprehend is going on. Central banks are buying gold and silver at a record high pace, while commercial banks and other large money investors are being just as heavy with the manipulations. Andy explains that this concerted effort from both ends, with some helping to keep prices down and others buying everything in sight, is a hint of what's coming. He believes by the time retail investors really catch on to what's going on, there might not be any more physical silver for them to purchase. Yet, there are more signs of economic troubles every day. All of the world's major economies are grappling with one serious economic challenge or the other, and at no point has it been more paramount for investors to be fully diversified using precious metals. Let's get back to the interview.
And this environment to really have their way with the market, and I would argue ultimately continue on their plan to drain the exchanges of the investable silver before everyone wakes up and says, hey, I want to take delivery too. But it'll just be very obvious that there isn't enough supply at that level to meet that kind of demand. And we're talking, really, really high industrial level or military level, where, look, we've sent off so much of our artillery, yet there is silver used in the guidance systems of so many of the advanced weaponry that we see. It's needed in military, it's needed in green and digital applications. It's still voraciously accumulated as a monetary asset. The story isn't over with silver yet, but it's a frustrating one, and I get it. It's one that I think is trying the patience of everyone, even the most logical, ardent gold and silver bulls. I think they have a hard time with the counterintuitive nature of it and the fact that it just continues to drag on and on and on until it doesn't. And I'm very confident we will see that moment, based upon the demand that we see at that level and really the desire by the big players to do all they can to keep it from going higher. You can't do that when the system really starts to break. And the question is, how close are we to that moment? I would argue closer than most people would give credibility to.
Right. In the spirit of things you're not being told can hurt you. That's another example.
Reality and what isn't. And I couldn't agree with you more. There are a lot of very smart, well-read people out there, maybe just arguably reading the wrong things. But I mean, look, you talk about rationale to be doing this. The Treasury Department, their borrowing estimate just came out. And look, we've added $1.85 trillion in 6 months, right? It took 209 years to add the first $1.85 trillion. We did it in 9 months. The Congressional Budget Office just came out and said that the government will add $5 billion to its debt pile every single day for the next 10 years. And what I found, kind of to your point, and a lot of the stuff that you've heard me talk about lately, Dunnigan, and also at the show, was you're right. Things were not being told, things that seem to be amiss and awry with what's happening on a level here, a social level, on a moral level, spiritual level, all of these things. And we talked about cancel culture and transgenderism and censoring and the rule of law not being equally administered. All of that stuff is eroding the fabric of this country and the way that people are viewing this country. And I think it's a big deal. It's something that needs to be understood, that, you know, this is not just about the numbers that we're seeing in precious metals and the mismanagement of the reserve currency. It's all the things that are happening behind the scenes too. And I think that I don't think we've even begun to see anything yet. But one of the most interesting things that I took away from what Fitch had to say was that it wasn't just about the economics of it. They said that it's also a breakdown in governance, and that you're seeing problems with the way the U.S. is handling their affairs. And so, look, this is a big deal. I think you're starting to see even the people who are taking a look at this that weren't traditionally inclined to say things like this are having a hard time keeping their mouth closed. Fitch being one of them. I'm going to see if I can find the actual comment that he said. He said,
according to Andy Schectman, the Fitch downgrade of the U.S. credit rating is just one of the many signs of trouble to come. Over the next few years, before a bigger crack appears, more institutions that have been on the government's side for the past decades will begin to speak against the state of the U.S. economy. Please share your thoughts about Schectman's video in the comments section below. Also, ensure you smash the like button, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.